you, I think, have a different view as to like 1999 and the feeling of the euphoria and excitement that people have in the market right now. Explain it.
Yeah. At the same time, it's hard for me these days to dispassionately remove the Bitcoin narrative from stock market valuation at some level, because I think they are more correlated than people want it to be. So the first dimension really is recognizing that we're in a totally different public versus private sector investment scheme. In 1999, the US GDP was growing on the back of globalization as a trend. And the debt to GDP ratio was around 40%. Right now it's 120%. So that's very different. And then two, from a fiscal deficit perspective, we obviously know we're now in a deficit, where in 1999, we were actually a net saver. Even though the current account deficit was starting to grow because of the federal surplus, it was still actually a saver economy, which is unimaginable to even think about for most young people today. So that backdrop is already really different. It means that the role of the private economy had been a larger presence in 1999 than I think now in 2025, where most of the kind of financialization of the markets we're seeing is really driven by sovereign flows. So in that sense, this overvaluation and the stretch is not just coming from, I think, the private sector and individual investors. It's really coming from institutional flows. And there's not a more prime example to share on that beyond the fact that the US government is proactively taking stakes in public companies here in this country at this moment. But to me, like that is so incomparable to 1999 as a construct. So this is a pre-Euro, pre-China WTO, pre-Eastern Europe being part of the Eurozone world, to which now we've shown all of that has not worked. And it's totally being unwound to this particular moment where I think all of this just shows you like there's many other things that are happening at the global level that we have to take into account.